Good evening. It's 6 p.m. I'd like to call the meeting to order. Please call the roll. Here.
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 Here. Here.
Here. Thank you. Let's please do the Pledge of Allegiance. Now is the time for public comment. Do we have any wishing to address the board? The format for our board is everyone's given 3 minutes to address. Anybody? Thank you.
The 2023 audit presentation by Robin Klingler of Shuffle and Boyle.
Good evening. Thanks for having us here tonight. I'd like to introduce myself. My name is Robin Klingler with Shuffle Boyle. I've been a principal and working in the Alton office for about 20 years. And with me tonight is also Julie Graham here in the green dress. She's a manager with us, and she was sort of the lead on this whole audit. So I get to talk about it and tell you the results, but she had the hundreds and hundreds of hours of work into it. So we might need to refer to her if you have a particular question. We also had another local manager, Sarah Smith, a supervisor named Laura Nettles, who also came out and spent time. Their focus and specialty is on the federal expenditures and doing the single audit testing. And I would also like, just before I get started, to let you know I want to give a big thank you to your staff, Mary, Donna, Cindy, Carrie, all the paths that we crossed. Everybody was very cooperative and patient with this, since this was another transition year. There's a lot to learn in year one. And then we hope to pick that up as the engagement continues down the road. So with that, I believe you have your auditor reports. No different than any other year, your report contains 6 different opinions, and there's some at the beginning, and there's some spread out in the middle, and there's some at the end. And the very first one that starts there on page 1 of your report, though, is our actual independent auditor's report on your financial statements. And so this would be based on an entity-wide, college as a whole, one business type activity, not a fund basis, as a whole opinion. And it is a unmodified, meaning clean opinion, the best opinion we could give you on your financial statements on an accrual basis. Back further, and you don't necessarily have to flip, but on pages 83 and 85 and around 91 are all of the opinions that have to do with the ICCB opinions. Those are the specific procedures that are required by the ICCB for the state adult education and family literacy grants. It's actually a lot of work for not a lot of money, to tell you the truth. Those grants now run about a couple $100,000, but they still require certain procedures for those. And those are both clean reports as well, no findings. There's also one in there for the enrollment data, where you're certifying the credit hours and testing of the credit hours as well. And there was no findings with that process as well. Back on page 95, then, is another opinion. All right, this opinion is sort of what's required by the government auditing standards that says, are there any sort of deficiencies in your internal control processes, meaning like material weaknesses or significant deficiencies? And if I relate that to you, I would say, as we look at deficiencies, we try to say, are they large, are they medium, are they small? And if they were medium or large type ones, we would want to put those in writing to communicate to you who's charged with governance, so that we make that communication known. There were no deficiencies of that. I don't want to overstate that. We're not necessarily testing all of your controls and processes. It just means as we perform our normal routine audit procedures, if we see anything along the way that we'd like to point out, that's where we would point that out. And so no deficiencies of that type as well. Your last opinion on page 97 is specific to all of your federal funding, and specifically your federal expenditures. And so back there, there's a schedule, the schedule of expenditures of federal awards. In current year, fiscal year '23, you spent $11.597 million of federal awards. And based on those awards, there's formulas and so forth that we do to say how many programs do we need to test. We had to test 3 in particular programs for you, and I just wanted to point those out. We tested the Education Stabilization Fund. Those are sort of the HERF monies that were still being spent in fiscal '23 that'll kind of be coming to an end, but there's still a few of those left. That was about $1.5 million of the expenditures. So that was still, COVID money, and will be non-necessarily recurring going forward. There was a TRIO cluster that we chose to test. That was about just under $800,000. That's a recurring program. And we looked at those expenditures as well. And lastly, we needed to kind of fill the calculation, and so we selected the Community Services Block Grant as well, and looked at the scholarships maybe offered to low-income students and so forth, and tested that program. You have an overall clean opinion on all of those programs for compliance with the rules of those programs. There was one finding that was reported due to reporting, and that was in regards to the HERF funds. They have a pretty tight turnaround. They expect you to do quarterly reporting within 10 days, and there was one report that we have to go ahead and write all up that said the December 31st one just was not filed within the 10-day requirement. It was filed pretty quickly thereafter, and I think you should, know the March one was timely, the June one was timely, so it seems like it's corrected itself. So with that, that's kind of an overview of the financial, or the reports that we issued after all of the audit work. There are a few highlights on the financial statements that I'd like to point out, and I think it would be best, since you're not facing the handout, if you probably turn to page 5 in your report. There's sort of a summary, management's discussion and analysis, both of the statement of net position and the changes in net position that we'll just kind of walk through. I'll wait for you to get there. So page 5. And so this is sort of a summarized form of what we call it net position. You might think of it as your balance sheet. And you can kind of see here that we're going to just go ahead and start in current assets for '23. We're $93.5 million compared to $88.4 million. So a $5 million increase in current assets. Most of that current assets consists of just cash and investments, short-term investments. You had $51 million of cash and investments in the current year compared to just under $49 million last year. What is also in that number are the property taxes receivable within the next year. And probably the thing that fluctuates the most would be what's considered other accounts receivable. And other accounts receivable are things like government grants, accrued interest, and student AR. Government grants being the thing that probably increased the most out of all the current assets, as you had a few new IEPA awards that were given to you, all kind of receivable at the year end, but I believe it was right early in July that you collected all those receipts. It was about $3.4 million, right? Okay. Even accrued interest for a change was up, right? Markets changed, rates have went up, and you had about $500,000 of accrued interest income too that we got to book. That was in excess of last year. So that kind of breaks down current assets. If we go to non-current assets, usually those aren't very exciting. That's your capital assets, all your property, your land, your building improvements, and so forth. What pretty much happened with that is you had new acquisitions of about $2.3 million. Nothing in particular than just CDB projects, fiber project kind of going on, a few building improvements and equipment, but nothing individually of significance, just sort of normal acquisitions there. Offset by depreciation. You run about $4.8 million of depreciation expense for your whole capital asset portfolio. So those two things net to that 2.6 decrease that you see over there on the right side. What's new on here, and might be exciting for us accountants, but the rest of you maybe not so, and I get that, is this right of use asset, this SBITA, and we call it SBITAs. Those are subscription-based information technology arrangements. And basically what that means is they wrote a standard that said, if you basically write a contract for the use of someone's software, right? Then, and I mean software where you're going to manage and put your own content on it, and it's long-term, multiple years and so forth, as opposed to just saying, hey, I have a subscription, to the Alton Telegraph, let's say, right? I just read their content. This is content you're using actively. Then think of that as basically like an asset. And basically also what we want you to do is we want you to put that liability down below, which we'll go over here in a minute. So if you end up writing a 4-year contract and it's $100,000 a year, what we really have done is created a $400,000 liability. And then the offset of that in the accounting world is that we kind of had to create an asset, and that's called the right of use, right? Now you have the exclusive use for 4 years of that asset that we're going to amortize off. And so I think this is just another way, if you serve on other boards or listened last year, this happened to the operating lease, and now it's happening to sort of subscription agreements as well. All that being said, you had about 2.7 million of those right-of-use assets in the current year that we were to add on there. Those are for your Elution accounting software, Blackboard, and CourseDog. Those kinds of products are the ones that we're talking about there. So with that, you have about 251.3 million of total assets and deferred outflows versus 246.3, so a $5 million increase over last year. If we jump to current liabilities, there's 26.5 million versus 24.1 million in the prior year. Really, most of that is AP, timing of the check run, timing of invoices being sent, and so forth. So that's just nothing larger that I wanted to point out there. The non-current liabilities, 83.7 million versus 107 million from the prior year. A lot of this is about $10 million worth of bonds being paid off in the current year, another 2.2 million of debt certificates paid, and then a large decrease in your OPEB liability, about 12.6 million. So that adds up to 23 million pretty quick. And OPEB liability, if you think about that, that is sort of other than pension type benefits that you're responsible for. And that decrease is sort of out of your control, but usually what that happens is you have to remember this is a point in time. This is 6/30/23, and I said compared to 6/30/22. At 6/30/23, maybe and at the time that the valuation is done, if there's a significant change in the value of the assets that offset the overall, pension obligation, you'll have a change there, and that's kind of what's happened to you. Now, you might say that liability changed by 12.6 million. Does that automatically go over to my income statement, my P&L, my change in net position? Automatically, and the answer to that is no. They basically say, we don't want that to directly reflect. We're going to sort of bleed that in over a period of 4 to 5 years. And if you flip down to the deferred inflow line item, which might seem a little confusing, and you look at a 9 million increase there, that's kind of the movement of that liability. So like you're going to sort of reap the benefits of a $12 million change in a liability over an average of 4 to 5 years. So maybe 3 of it was affected in the current year, and that's where the rest of it kind of goes. And they'll kind of give us a schedule of amortization of those kinds of outflows and inflows. Okay, that's a lot of specific jargon, but we got through it. So net position is 110.5 million versus 93.6 for a 16.9 million increase. That 16.9 million increase is exactly then, if we flip to the next page, then where your change in net assets would be. Might see your receipts over your expenditures. So I guess actually flip 2 pages in your handout, so you'd be like on page 7. I should have asked if we had any questions on that page, but I'll just keep going, okay? Or
I just want to know what state agency gives you that deferred pension number?
we have to get that straight from, we get the SERS report that's published and the CIP report. So a lot of the footnote disclosures and the actuarial assumptions that are other pages back there, and a lot of information comes straight out of their report. So, okay, so now we'll kind of go over the operating results. Again, the overall change in net position that you would see 3 lines from the bottom is a positive 16.9 million for 23. If we look at your operating revenues, you'd see $7.5 million. Operating revenues for your institution are strictly pretty much tuition and the fees you charge students. We're not talking about any of the grant money or anything that you get. So the tuition and the fees were up about $900,000. You kept credit hours were pretty consistent. If you go back and kind of look at the certified credit hours, in the prior year they ran around 59,000 something. This year they were 58,000 something. So less than a 2% increase in those. So it's not the credit hours that's necessarily driving that. And I believe you held the credit hour tuition at about $125 an hour. So that held steady. What did change was your tech fee. That changed, went up quite a bit from $4 to $11. And just less scholarship allowance against those fees. Operating expenses have decreased $6 million, and there's a page after this one that will detail those out a little bit better by function. So we'll skip that for a minute. We'll stick with revenues and go down to the non-operating revenues. And that's where you can see there's local taxes, state government, the on behalf, federal government, et cetera. And if we look at the local taxes, they're consistent as expected. That's predominantly $31 million of your property tax and $3 million of the CPRT tax. State government, 12.2 versus 10.9. I mentioned it earlier. $2 million of that increase is an additional IEPA grant. And the rest of them I kind of eyeballed all throughout and looked reasonably steady. The state government line item is also where you house like your ICCB base, support monies and the equalization monies, the recurring monies that come from ICCB. On the federal government line item, it's 11.5 million versus 16.9, and this is a straight decrease because of the HERF monies that were allowed. You had about $4.3 million of student portion HERF monies that you were able to use for student and scholarship assistance and whatever you chose to do in prior years, as well as 1.9 assistance for the institution as well. And those will be kind of running out. And I suppose that those good years are past us now for those. The investment income obviously is a function of interest rates. As CDs mature, you move some money to Busey Wealth Management and any type of unrealized gain recovery. So you kind of had a swing there from 1.9 million of income versus a $1 million loss in the prior year. So those factors all contribute toward that change in net position. And I will flip, if you will, again, one more page so we could talk about the expenses. And right there, sort of in the middle, are the expenses sort of by program. So we have instruction, academic support, student services, and so forth. And really, if you look, your operations are fairly consistent, and you would expect to see that consistency. Where we see the largest fluctuations all the way over to the right are in instruction. You see a decrease of $3.3 million of costs. And then you also see a $3.5 million cost in scholarships, grants, and waivers. That one's easy to address. Just like I told you, you had less revenues for HERF for student purposes. You had that much less than obviously for the scholarship assistance. So those are directly related. If we go back to the top line, most of this instruction decrease is predominantly related to sort of that change in the pension position that we were talking about. So you have to flush through at least 1 year sort of change on your pension liability, your OPEB liability, sorry, not your pension, but your OPEB liability. Salaries, for the most part, were relatively consistent. I will point out in the academic support line, there were some increased tech plan supplies. And I did probably, see, did I want to get out? Oh, and the public services line item, there were increased salaries and contract costs also related to those IEPA grants that I kept referring to. So really, those were some of the highlights. Everything, there's a lot of consistency in some of your line items due to the recurring revenues and then the services that you're offering to the students. So overall, those factors led to the $6 million decrease in the operating expenses. Any questions on those? Do you want to?
Did you comment on the scholarships decreasing?
Decreasing? Yes, I was saying that was all HERF as well. So on one side, last year, we had the HERF revenue, and then you see it directly right there on the scholarships decreasing, where you were able to provide that student assistance because of those COVID program dollars that were not available this year. And at this time, not available going forward either, so. I tricked you on that one because I hit that at the bottom and then I went back to the top, so. Okay. If you think of something later, by all means, Mary has our contact information. Please, pass your question along and I'd be happy to give you a call or email you or address anything that you have a question on, since this is a very shortened version. The last couple of things I would like to try to point out is that we also have a loose leaf letter that would have been part of your, yep. There's an auditing standard that kind of requires us to put certain communications in writing to those charged with governance. In short, that's a clean letter, right? But if we had any sort of questionable accounting policies, we do tell you we adopted a new policy, which was all of those IT assets. If we had large corrections that we needed to make, we would make it known in that letter, disagreements and so forth, and that's a clean letter. None of that to report. And I'd also like to just try to close here by saying that, sometimes we even issue another letter, which would be sort of some general management comments of little things that you see along the way you could do better, the small ones. But we might have just had those verbal conversations with Mary. And I didn't want those to overshadow the fact that you have an excellent accounting staff. You have an excellent finance department. It was great to work with them. They really take pride in their work. And we don't see that everywhere. So that's a special thing. And just good job, Mary. So. So with that, I just also want to say thank you for engaging us. It's important, we're local and you're local, and it was nice to, have to be part of something that is right here in your own backyard or at least close to our offices. So I appreciate that and look forward to the further engagement. Thanks.
Thank you very much.
Can we have an enrollment update tonight? Sorry.
These numbers are as of today. The inquiries, spring semester, and the inquiries are up 24% compared to last year, which is 1,082 compared to 874. Also, our admissions gone up as well, which is about 12%, which is 664 compared to 591 last spring. Also, enrolled students gone up 27% compared to last spring, which is 212 as of this morning compared to 166 last year. As far as the new and current students update, enrolled students count is 11% up compared to last year, which is 2,224 compared to 2,000 last year. And also enrolled credits gone up 12% to 24,046 compared to 21,415. Nelson campus enrolled student count is 250 as of this morning compared to 159, which is 57% increase. Also, Nelson enrolled credit, which is 1,701 compared to 1,156 last year, which is also 47% increase. Full-time students count is 1,140 compared to 985, which is also 15% increase. Also, full-time student credit count is 16,631 compared to 14,485, which is also 15% increase. Part-time students count 1,084 compared to 1,024, which is also 6%, almost 6% increase, and also enrolled credits, which is 7,415 compared to 6,931, which is also 7% increase. High school partnership numbers, we start enrolling next week for this spring, so I don't have those numbers, but as we see, it's looking good. This Thursday, we have orientation for this coming class for spring, so we are very excited, and this is what I have so far. Any questions?
On that N.O. Nelson number, is that concurrent?
Total number of new students and current students. Those are count as if, yes.
So those are, I mean, are they mostly high school students that are concurrently enrolled in college, or are they both? Are they
Both.
Full-time?
Both,
Yeah,
yes.
okay.
I guess it's not a question or a comment. I've seen some information from the ICCTA talking about enrollment in that, and it still says that community colleges in general haven't really caught up to where we were prior to COVID. Would it be possible for us to, not now, of course, but
I
maybe
read
see
that
something?
article this morning. Dr. T forwarded to me. I think we're beating the odds at this point, so I hope we continue to concentrate the new students. Not only new students, the key is to focus how to keep them intact in the college, the retention. So that would be a key. Yes, basically still the rest of the community college is still in downturn, but we are, doing good. We're beating the odds.
But are we back to pre-pandemic levels?
I would not say so, but we are heading towards that. But numbers are encouraging, very encouraging. We are seeing consistently increase from last fall, and last spring also we have about 10%, if I'm not mistaken, but fall we have about 5%, and we looks like we're gonna have increase this spring semester as well.
Would there be one or two specific things that you can attribute that improvement to? For example, I'm thinking of things that we've done over the past 3 years that should maybe be paying off now, like strengthening our liaison with the high schools, for example.
Of course, we have a great team, and especially marketing is doing a wonderful job. We are very active on the social media, which plays a critical role for the student enrollment. So we are actively engaging with the student through the social media, which is very good. And from last 4 months or so, we have increased our geared towards reaching out to the student, increase our communication a lot. We started calling students, especially from the last month, we started a new system for texting, which is really helping us. We're reaching out to the students. So overall communication, we tripled it so far. And that's that we're reaching out to those students quickly and timely manner, so before they change their minds. So that's, I think, it's a contributor. Marketing and a high school, of course, yes, we are actively going to the high school, concentrating on dual enrollment and concurrence, but at the same time, from last 3 months or so, our focus also towards not only for the dual credit. I personally started going to the different high school, reaching out to speaking to the students, high school seniors, and educate them. Basically, we cannot convince them, but we started educating them that this is the best way to go so they can save money. It's same quality of education, and that's what we've been concentrating. I mean, we connected with Edwardville High School, so I'm gonna, for next couple of weeks, I'm gonna go having a presentation, not for the dual credit, for the coming fall class, concentrating, reaching out to the students, and same as Alton High School as well. So that's a lot of initiative we're putting together. So, I mean, not only for the spring, for the main focus is for the next fall also.
Thank you very much.
Okay.
The omnibus agenda?
The omnibus agenda is presented for a vote. Is there any item the board would like to be held out and voted separately?
I'd like to look at items H as in Henry and I as in Indigo separately.
Do I have a first and a second to vote on the omnibus agenda with H and I removed?
Motion.
Second?
Second.
Call the roll, please.
Okay. Johnson,
Yes.
Ware,
Yes.
Campbell? Wertz?
Yes.
Rust?
Yes?
Trent? Griffin?
Yes.
Do I have a motion to approve H, item H? Do you have a motion? Motion. Second? Second. Discussion?
Yes, I'd like to discuss it a bit. Is there a reason why, and I'm not sure who I'm asking, but is there a reason why we specified a Ford product for this? I mean, I would have expected certainly the number of passengers, like we want a 15-passenger van or something like that, but, I mean, aren't there other manufacturers that make vans that, of the capacity that we require?
We will bid it. We will posibly bid it. I think when Bertie put it together, Bertie was looking at what was available. She's new, and she didn't understand the whole, we have to bid these items. And so she went with what she could find and one of the best options that she found. But that's what she did to get it into, to kind of move it forward. She was told she had to bid it, we put it in the board book, and it just came across with how she described it. But it will be fine as just one of the basics. She needs this many passenger van, and then we'll bid it to see.
Okay. So if I understood it correctly, are you saying that when we actually solicit bids, we won't be specifying Ford, we'll just be specifying the specifications that we want, like the number of passengers? That's probably the crucial thing, I would think, the number of passengers. How many passengers is it, would you say? Do you know offhand? 12. Yeah, I think if you go more than a certain number, you run into all kinds of different regulations, which are onerous. Okay.
And one of the reasons of it kind of being sort of not in order is, this is money that is gonna go away. ICCB is asking for anybody who's not spending their money to send it back so they can redistribute it. So we're trying to think about what we need before we have to send any money back. And so
Right.
there's kind of a rush right now to get that taken care of.
Now, okay, my second question is, was the Illinois government joint purchasing act taken in consideration? Sometimes it's called Unified Procurement Program, where we, the state of Illinois does bidding, and you can use what they've already done to get a better price. Yeah. Okay. So, I mean, you can actually, by going that route, you don't actually, if I understood it correctly, you don't actually have to get bids. State. Gary has experience with that? Is that? Okay. Okay. No further questions?
I agree, we ought to open it up to all the dealerships in our district that have the opportunity to bid on that agree. Kevin and I agreed on something twice now. Okay, call for the vote, please.
Trent? Campbell? Wertz?
Yes.
Johnson?
Yes.
Rust?
Yes.
Griffin?
Yes.
Ware?
Yes.
Second.
Discussion?
Yes, a few items of discussion I have. Now, I wish Gabe is not here.
Gabe's
Maybe
on
he's
Zoom,
listening.
but I can,
You think, okay.
maybe.
Okay. Now, this is, now, we're not being self-insured, is that
No,
correct?
No, we're level funded. In the past, we've never had a contract directly with USI. And as a cost savings measure, they've gotten a percentage directly from the provider. This is actually, we've negotiated a set rate with them so that when our insurance rates go up, they're making more money. This gives us more transparency and is a set rate fee with them that Gabe worked diligently to negotiate with them down to this.
Okay, so they won't, their compensation will not come from the provider?
Right.
It's coming from this contract?
Correct.
Okay. Yeah, okay, I really support that. I think that's a good way to
Yep.
go. Were there any other brokers considered for this? I mean, it's,
We did, we had another brokerage firm come in this year and do a presentation. They both presented their numbers to us, and at the time, we selected it based on our experience with USI and the provider, and I think the numbers were a little more solid for us to be able to stomach, even though it was an increase either way, so.
now, is this just medical? This is just medical, not?
This is our health coverage benefits,
Just your health
correct.
coverage, okay.
Yep.
Okay. Will we do this, be able to do the same thing on some of our other risks, the liability on that?
Yeah, I mean, if that's something, yeah, I mean, we can always look into that, of course. They do a magnificent job. They just recently included us into a statewide consortium for all of our, which I don't know if you'll recall, there was a substantial savings for all of our property and risk policies that we renewed with this year through a consortium through the state of Illinois. So, I mean, we have been with USI, and I understand, I think I understand your questions and your concerns, and it's always something we're looking at, especially as insurance on both property and our health continues to climb, so.
Yeah, I mean, our health coverage, I just did a quick calculation. It looks like it's around $12,000 or $13,000 per employee is our health insurance cost, and that doesn't include some other things. So isn't this really, could this really be considered a $270,000 contract rather than just 87? Because we're kind of making like a 3-year commitment. I mean, we can break it off with a 60-day notice, but we're making kind of a commitment to them, and with a 3% escalator in year 2 and year 3, right?
No, this should just be a 1-year contract.
Where? It was. He's speaking to us from the heavens.
Yeah, this should be a 1-year contract.
It's a 1-year commencing
Section 7.
7.
Is that Moses? Do I-
Yep, and Matt has reviewed it. Thank you, Matt. Yeah, this is just for 1 year.
Well, I mean, it is, but it isn't, it is and isn't. I mean, if you look at the terms of it, it's automatically renewed unless we give them a 60-day notice. And the wording on the 3% is a little bit unclear to me. It just says, parties agree that there is consideration for USI to get 3%. They may want, I guess they might want 5%, but I don't know. It seemed like a kind of a strange wording. But I think we should look at it as more of a 3-year thing than just a 1 year. But anyway,
And
I'm not
Gabe
seeing
just
it.
sent me a note, said, look at section 7.
Yes, I'm looking at section 7 under term and termination. I'm not seeing the 3%.
the 3% and the termination provisions are in 7.1 on page
Oh,
9.
okay, I got you.
Yeah. I know, I should
Yeah,
probably
and
ask,
that would be if we would choose to renew with them.
do you think that with a 3% would be automatic? I mean, it just says parties agree that there is consideration. Oh, I don't know what that means. But- Any other discussion? We call for the vote.
Trent? Yes. Campbell? Yes. Wertz?
Yes.
Johnson?
Yes.
Rust?
Yes.
Griffin?
Yes.
Ware?
Yes.
The faculty senior, oh wait, we got to do that one of us. Did you? Yeah. The faculty seniority list.
Do I have a motion to approve? Second? Second. Any discussion? Please call the roll.
I'm sorry, I didn't hear who was first and second.
Me and Donna.
Okay, sorry. Okay.
Call the roll, please.
Johnson?
Yes.
Ware? Yes. Campbell? Yes. Wertz?
Yes.
Rust?
Yes.
Trent? Yes. Griffin?
Yes. Revision of staff team policy 108, personal leave to comply with the Illinois Paid Leave for All Workers Act.
Do I have a motion to approve? Motion. Second?
Second.
Discussion? Please call the roll.
Yes.
Ware?
Yes.
Campbell? Wertz?
Yes.
Johnson?
Yes.
Rust?
Yes.
Revision of staff team policy 109, vacation leave to comply with the Illinois Paid Leave for All Workers Act.
Do I have a motion to approve? Second?
Second.
Any discussion? Please call the roll.
Trent? Yes. Griffin?
Yes.
Ware?
Yes.
Campbell? Yes. Wertz?
Yes.
Johnson?
Yes.
Rust?
Yes.
New staff team policy 112 to provide leave to part-time team members in accordance with the Illinois Paid Leave for All Workers Act.
Do I have a motion to approve?
Motion.
Second?
Second.
Discussion? Have a second, any discussion? Call the roll, please.
Ware?
Yes.
Rust?
Yes.
Trent? Yes. Griffin?
Yes.
Campbell? Yes. Wertz?
Yes.
Johnson?
Yes.
Under information items, Lori, are you going to provide Dr. Traska's
Yeah,
report?
I can do his team report, but if there's any questions on 5A or 5B, be happy to pretend to know the answer to them. All right, so obviously, Dr. Traska is regretfully not able to be here tonight. We send him a get well soon message, and I'll do my best Ken Traska impersonation for you this evening. First and foremost, he wanted to make sure to let you know that we're pleased we had no emergency issues over this holiday break, so we're starting the new year with a new trend, and it was hopefully a restful break for the majority of our staff. I know some of our maintenance team and of course our security department worked over the break as well. Some highlights, of course, we're welcoming back our faculty this week, welcome back staff last week. In-services in full swing this week, as you can tell by the stress on Sue Zarwinski's face in the audience. And we're really looking forward to the start of classes on Tuesday, this January 16th. Dr. Traska participated in the Foundation Strategic Planning Committee meeting last Friday. And it was a very productive session from what I understand. The foundation's strategic plan, their goal this year, this round, is to really align with the college's strategic plan. So I think he's mentioned that already once before, but we've had some sessions with our key direction leads and the foundation's strategic planning committee, and we're really just encouraged by the way they are building their plan to align so that they can better support the college's efforts there as well. Dr. Traska plans to provide a brief update on the college's strategic plan to all of you in February, and as well as share the progress of all those strategic planning initiatives to the full campus community at the State of Trailblazer Nation that's scheduled for this May. The executive team is continuing our budget planning this month. I think the plan was for tomorrow, but we'll see as Dr. Traska gets better and returns to campus. So the search committee for the Chief Data and Technology Officer has met. They're going to begin interviews in February. The plan is to hopefully have a recommendation to the board by March, by the March board meeting. He also wants me to mention Friday, this Friday, June 12th at 2 p.m. in the Hathaway Cultural Center. We are hosting our first superintendent panel. Of course, our very own Dr. Jill Griffin, representing the Bethalto School District, is going to be a part of that, as well as Todd Dugan from Bunker Hill, Brad Tuttle from Jerseyville, and Patrick Shelton from Edwardsville. The focus of that conversation is around the future of education and the urgency to facilitate meaningful change across our sectors. So Dr. T is looking forward to moderating that discussion with our superintendents and has invited the entire campus and, of course, all of you to attend that. It should be very well done. There is a Zoom link if you can't make it to campus. And season 2 of Dr. Traska's No Box podcast is kicking off in February. He plans to invite a number of education leaders, including college presidents, government officials, for this season of his podcast, so stay tuned for that. In terms of the main complex, we actually heard from Chris Shabetta today with Hastings and Shabetta. We still don't have an approved contract from CDB. But they do anticipate they'll be receiving that approval soon, so we are scheduling meetings at the end of this month to start. That'll be the design phase. So if we can just get started on design, I think the momentum and the excitement around seeing some of these drawings and everything come to life will hopefully keep moving us forward. So I think that's it, unless anyone has any questions.
Not a question, but next week we have a couple of days of below zero temperatures.
Yes.
And I'm wondering if you're doing anything special to
Lots of prayer.
prepare for that.
Prayer. No. Well, our maintenance, I will say, I have to give kudos. Our maintenance team is divided into our school colors. So we have Team Sunglow, and that's our HVAC team. They've been working for the past few months preparing for this, and we're doing our best, making sure in terms of just keeping up with the regular maintenance of equipment. We know things are going to happen, but we are preparing for it, and Brad and his campus security team helps us keep a 24/7 eye on situations, as well as our team members of Team Sunglow who monitor that remotely as well. So, yeah, I shouldn't have spoke so soon about no disasters, right? I just asked for it. So.
Black cat at us.
Yeah, I take it all back. Retract that, please.
Well, thank you. There being no further business, this meeting is declared adjourned. Thank you.